We will either find a way or make one. Hannibal Barca. My friends, if you have that attitude as far as your training goes to become a market master, a charting master, you will do it because you will just keep going until you master it. Don't worry about how long it takes because once you do master the charts, which anyone can do, you will then make up for all the time that you ever spent. It just takes some mileage. Let's jump into these charts. Stocks are up along with gold and Bitcoin. Bonds are down. Now, as we look at these charts, you can see the latest 2-day candle here. Look at the volume. It didn't reach average. It hasn't been average volume on the 2-day candle going all the way back to the Wednesday and Thursday, April 9 and 10. You can see on the weekly chart, we have to go all the way back to April 7 before we get average volume, well, above average volume, a big, when we had that plunge, when Trump first started talking about tariffs. We saw things go down for 2 weeks, the week beginning 31st of March and the 7th of April. Now, things had already peaked out in late January to mid-February, and it started moving down on the week beginning February the 24th. So we were already short when things started moving down strongly. And of course, we were long before we had things super bound up this week. So again, where does that leave us right now with this lack of volume? And I tell everyone, if you've got strong volume and the market moving up, that's like you're building your house on a solid, rock solid foundation. When you don't have the volume, you don't have the buy and buy the market, the buyers aren't just going crazy buying, then you're sort of building on sand. There's not anything backing that up other than just exuberance of the few players that are buying. So we'll keep an eye on things and see where that goes. And that figures into our directional probability. It is 65% continued up over the next 5+ days. We've got a 70% backtest accuracy, and we're expecting a move of about $12. Now, you might say, Tom, when you say you've got a 70% accuracy, backtest accuracy, what does that mean? Well, that the strategy is effective 75% of the time. We tested it over 10 similar setups in 2024. So out of those 10, 7 of them worked. So again, that's where we're looking for things to move in the next 5+ days. 65% up probability. Now, again, that's not good enough for me. If I'm already in and already riding the market up, yes, I will stay in. But again, if I was looking to get in and we're only at 65%, that again is where, and of course, what is our main method of trading? We're very interested in getting in when the market rolls over, going down, that is into a down trade, either a put or an inverse fund like SH, which is the inverse for the S&P 500. You can see where it goes up when the S&P itself is going down. It is an inverse fund. Now, you need to practice those. And again, everything we do, we're not a stock calling service, we're an education firm. I want you to practice things like inverse funds because they're not all they're cut out to be. Nothing is perfect, particularly when it comes to derivative types of assets. When you look at something like SH, it is managed, and since it has to be managed very intensely to match percentage for percentage in the opposite of what's happening with the underlying equity, that would be the S&P 500, SPY, that ETF, then the fees are a lot more, like 10 times more, which still is not a huge amount because the fees are so low on something like SPY. And also, those funds are revalued every day, so your losses can compound. So that's why you need to practice it, see if you like it. But the nice thing about being comfortable with something like SH or PSQ for the NASDAQ 100 or TBF for 20-year U.S. government bonds or BITI for Bitcoin, those are all the inverse funds. And in fact, I'll put our inverse training at the end of today's video for you. If you haven't taken that yet, inverse funds, how to make money when markets crash. What we learn from that is it gives you other things that you can do when a market is crashing. Well, it's not been crashing. It's been moving up. And like I said, we've got a 65% directional probability of that to continue. And when we get around the 596 mark, we do have some resistance there. That is what our sell point is. And again, we calculate both your entry and your exit. Your entry is a couple of dollars lower than it is right now at 584. And again, your exit is at 596. And you might say, well, how would I even know when to get in? Well, when you see a green candle being laid down with decent volume, that shows you it is continuing to move up. And again, when you jump in early and you keep riding it up, that is the most beautiful way. Let's move on to the Qs. Qs looks very similar to the S&P 500. Again, not a lot of volume backing all this stuff up, but the last 2 days, beautiful. S&P was up 0.66% for the day. The NASDAQ, which is what we're looking at right now, up 1.52%. And we're still 60% directional probability of upward movement on both those. The S&P and the NASDAQ yesterday were at 70 and 65. Today we're at 65 and 60. So again, our probability of continued up movement is going down, but it is still positive. The backtest accuracy on the NASDAQ, 165%. Now let's move on to 20-year U.S. government bonds. You know we've been bearish on those for the last several days on this ETF. Yesterday we were 75% bearish. Of course, we were correct. It's down 0.41% today. That is decreasing a little bit to a down probability of 70%. Our backtest accuracy, though, is at 75%. And again, entry points around $86. See about a $2 continual down move before. At the $84 mark, we hit some significant resistance. That is where we are on bonds. What about gold? Well, gold was up today, 0.43%. We are, because of gold, you can see what it's done here this week. It has broken the trend quite strongly. It broke the trend when things jumped down strong on Monday. It busted through the trend line, the weekly trend line on the half day, on the 2-day, and the weekly. That's spelling some trouble. We are still down on gold, even though it recovered a little bit today, 0.43%. We're 60% down with a 60% back test accuracy. We see about a $4 down move possible over the next 5+ days. So keep that in mind with gold. Again, after this unbroken chain of up movement, to have gold, flip over into the red and head down, that is what we like to see as a weekly vertical crossover going down. The trend has been broken. Doesn't mean it can't resume again, but it does mean that as far as our calculations go, the directional probability has gone to the downside. Not super strong at 60%, but still to the downside. What about Bitcoin? We're 75% up. Yesterday we were, really where we saw things sort of starting to break. It again was making us, and again, I cautioned against that. I said, I'm showing about 55% bearish, but what does 55% mean? It means a coin toss. And then Bitcoin, of course, had shot up those few days prior and then started weakening. But then what did it do? It turned right around today and popped up again, pulling us back up to a 75% directional probability of an up movement. 80% backtest accuracy, about $2 over the next 5+ days. And as I was talking about yesterday, we looked at where the prior highs were on Bitcoin. I showed you what? I showed you the 24-hour-a-day chart where Bitcoin hit its high of highs. And that, of course, was 109,356. And, of course, the high so far this week, 105,706. So not too far away. And I said, don't give up on Bitcoin. And this is the 24-hour-a-day chart here that we glance at every now and then. Of course, what are we trading off of? A very similar looking chart, but it's the ETF that tracks, of course, Bitcoin. The reason I like the ETF is because you have a couple of things with the ETF. You have the protections of the fact that it's an ETF, and if you want to invest in Bitcoin at some time in the future, again, the caveat, we're not a Bitcoin calling service. I want you to practice trade Bitcoin with us. But when you really get into Bitcoin, you don't have to put your money into a Bitcoin exchange. I know there's a lot of purists out there that I don't want to have my money in any kind of ETF managed by Wall Street. Whatever, do whatever you want to do. I'm just telling you what I like. I like the fact that I didn't have any money in FX, when I didn't have any money in any Bitcoin exchange that had any issues, because I have it in the market. I have it in an ETF. I have the SEC watching over things, backing it up. Is that perfect? No, it's not. I also like the fact that I have what? BITI, which is the ProShares short Bitcoin, single short. And in fact, I traded one of these shorts here a while back with my own money and did quite well when we had a short run. I think it was this one here. We had things pop up back in June of last year. It was just a nice little 4-week period where Bitcoin's hammering down, I was hammering up. So again, those are choices that you have. So lastly, 75% directional probability over the next 5 days that Bitcoin will move up another $2 on HODL. Remember, this closed today at $29.67, so $2, nice little gain there per share over the next potential 5+ days, 80% back test accuracy. That means that over the last, it was 80% effective strategy over the last 6 times that we saw this setup. That's where we are, my friends. God bless. All the best from the whole team at Charting Wealth.